Hello and welcome to the Weekend Investing Daily Byte of 16th of July. A not so exciting day today. Stocks weren't really moving. Very specific sectors again leading the rally, and mid and small caps not very exciting at all. But nevertheless, let's get into the markets. But first, we are running a campaign for the MI20 and MI35 strategies at Weekend Investing, which have completed fantastic 3 years. So it's a anniversary celebrations, and we are offering a code to avail of a discount in case you may be interested. The details are there on the screen. And the real estate tax shakeup is coming. That is the strong rumor in the market, and you could see real estate stocks zoom up today in a otherwise dull day. So we'll discuss what all is getting rumored about it in the second half of the video. But please, my request, please subscribe to the channel and click on the bell notification. About 47% of people who watch our channel have not subscribed it. So please make that number down. Where are the markets headed? Markets are absolutely flat. Last two sessions have been dead flat. Market closing where it is opening. Yesterday it was a 0% day. Today also at a 0.11%. Nifty is not willing to move right now. It needs some trigger, but at least it is not falling. That is the saving grace, because after this kind of a rally from the last month and a half, an easy 1,000 points is a very easy giveaway at any point of time. So as long as it's not happening, we should feel reasonably comfortable. Also, I think with the budget now, with tomorrow being a holiday Wednesday, you only have two sessions left this week, and a couple of sessions the next week. So we are very close to the budget now, and that also whatever adjustments need to be made before the budget probably are done. Even the same thing that we witnessed before the general elections also. The last couple of months before the elections, really the market wasn't going anywhere. I mean, we were still stuck in this wave-like fashion with tops getting made at 22,800 and bottoms at 21,800. And then we had the volatility post that. I'm somewhat guessing that we will get not as much, but some volatility nearer or actually on the budget day. And let's see where we go from there. Nifty Junior actually was uh, down by 0.6%, so not as strong as Nifty today. And in the last five sessions, we've had four sessions of downward movement from the open. Only yesterday's session was up, so there is some exhaustion of momentum that can be seen here as well. In terms of the mid caps, again 0.04%. So we exactly closed where we had opened. Only yesterday was an up day after five sessions, and today again we've not been able to go up further. Market is a bit tired on this front. On small caps, there was no movement at all, 0.18%. Last seven sessions, rather eight sessions, have been in a very narrow range. So the small caps also seem to have exhausted the current momentum here. Bank Nifty, again, last seven sessions within a significantly small range. So the market has become absolutely dull and flat, and every day there is one section, one sector that keeps on rotating, keeps taking the lead, and making the market stay relevant on a daily basis. Gold, on the other hand, is breaking out. So this is the gold US dollar chart as of 16th July around 4 p.m. You can see that we are headed towards an all-time high close today if there is no last second blip here. And I think this setup is telling you that gold is about to go very big. How big? I think at least a couple of 100 points look not out of reach right here, and that would mean a big move even on the INR gold chart. And in terms of today's heat map, you can see that Reliance gave up some ground, 1.5%. Kotak Bank was down 2%. Ultra Semco was down 1.5%. You also had some pharma names come off. Cipla and Dr. Reddy came off. NTPC was down 1.3%. But FMCG and energy public sector enterprise stocks were the ones in focus. So levers up almost 2.7%. Tata Consumers up 2.2%. You also had Britannia go up 0.82%. So again, a slight defensive mode in terms of the movement of the money. Coal India, BPCL also doing well. at 3% and 2.6%. Bharti Airtel also doing well at 1.92%. LIC has been doing very, very well. Maybe there is some expectation about some tax relief in terms of LIC, the expansion of the Section 80C. That is something that people are looking for. Geo Finance, however, after its poor results, was down 3%. IRFC and other rail stocks also were down today. Zomato was, after yesterday's hurrah, today it was smashed down after they announced that they will make it free within a certain specific kilometer range and not charge the convenience fees. Siemens and Trent also down, Gas Authority down, HAL and BEL also down, along with Varun Beverages and REC. So many uh, stocks that were just sort of correcting and listless in terms of their uh, movement during the day. If we see the sectoral uh, data, you can see that real estate stocks leapt up 1.7% today, and real estate has been very, very quiet the last week and a month or so. Of course, on a 12-month basis, real estate stocks have done really well, but in the last 1 month, 0.3% negative. Last 1 week, 0.1% negative, and today we were up at 1.7%. So certainly the market has picked up this rumor that I'm going to talk about and trying to push up the real estate stocks. FMCG also going up at 1%, IT up 0.6%, consumption up at 0.4%. So consumption also, because there are budget expectations that they will give some relief to salaried taxpayers, and hence some basic consumption items can go up. So that is where the defensive move has been in the market today, and all other sectors practically were either flat or down, with public sector enterprise actually booking some profits at minus 0.6%. FMCG has been doing well since we broke out of this cup and handle that I talked about few sessions ago. And in fact, in the last 8 sessions, we have moved without a break on a daily basis and continue to go up. So FMCG have certainly caught the attention of market men. Stock spotlight is on Alembic Pharma. We are up nearly 10% today, a fantastic chart. You can see how it built up this entire base from almost 30 rupees to 580 or 600 rupees over a period of 5 years, when the pharma rally was very, very strong. And then pharma as a whole went into a correction, but this went virtually, you can say, sideways kind of a time correction, and then it broke out again, and then it came back and sort of retested this base and is now ready to break out again. So there is potential that this will go up far. Let's see how it does, but very, very good move in terms of the stock hitting new highs on a dull day. So real estate tax shakeup, what do we need to know about here? So this was the headline today, that the long-term capital gain on real estate is in for a new role in budget 2024. And of course, these are all rumors, these are all expectations. Nothing can be said what is actually coming or not. But since leading newspapers have carried this news basis very strong sources, and stocks have actually moved basis these moves, there could be something to it. As they say, there is no smoke without fire. So currently, what is the status is that there is short-term capital gain for real estate. The time period is 24 months. So if you hold a any real estate for less than 24 months, you basically pay your slab rate. So if I buy a real estate today and sell it within 24 months, I'll have to pay the capital gains as my slab rate. If my slab rate is 30%, I pay 30%. If my slab rate is 39% or whatever that is at the highest level, you pay that much. This compares very unfavorably to equities, where you have within 12 months, if you are buying or selling equities, you are paying only 15%. When you compare this with gold or debt funds, the time period is 36 months. So if you are buying gold and selling gold within 36 months, you pay slab rate. If you are buying and selling debt funds within 36 months, you pay slab rate. So there has been, of course, within real estate, there is benefit of indexation over long term. So over 24 months, let's say I've held something for 5 years, then I pay 20% long-term capital gains with the benefit of some indexation. But because inflation has been benign, the indexation benefit is rather poor actually. Listed equities or mutual funds, as you already know, over any 12-month period, above 12-month period is 10% only, and gold and debt funds above 36 months, so over 3 years, is 20%, and you don't get indexation benefit on that. So there has been murmur since a long while that why should different asset classes have different tax treatment. We are pushing people towards one asset class, giving incentives, but there has to be some, sunset to that particular tax benefit, or you make other asset classes also compete equally on taxation front. So why should, any asset class be not looked at favorably because of taxation reason? That is the sort of intent of that discussion. And personally, I would think that that makes sense. I mean, if some asset class is uh, has a you can say a natural affinity by most people to go buy that, but you are penalizing them by putting up higher tax rates, I think that is not fair. uh, Taxation should not depend upon which capital asset you are creating. If you are creating equity asset, that is fine. If you're creating real estate asset, that is fine. If you're creating gold asset, that should also be fine. So in my view, these should be the same. uh, where the similarity should be is of another question now. Whether should all of them be to 15% for short term, or should all of them be 10% for long term or 20% for long term? That is another debate. But the main debate is real estate, as of now, along with gold and debt, are unfavorably placed versus equities. And with the kind of returns equities has made, and if you see it from a perspective of the income tax officer or the finance ministry officers sitting on the other side, they are saying these guys have made a lot of money in the last 4 years. They should not go easy. We should not go easy on them. So that is the kind of narrative that builds around once markets do well. That and one of the government finance secretary once had said that these all these equity folks, they don't do anything, they just sit and they make money. So that is the sometimes the attitude and the thought process from the other side. So from that point of view, having everything at the same plane probably is unbiased and equal footing for all asset classes. Other concessions. So the concession that is potentially out there is that real estate should be brought to 12-month period. Now, whether that percentage will change or not is something up in the air. But even if real estate becomes the long-term holding period becomes 24 to 12 months, it will spur a lot of investments into real estate. Right now, there is a lot of tendency for, because the stamp duties are reasonably high, so people don't get into real estate unless they really want it for the long term. But if the uh, if there's tax benefit in terms of that slab rate going away, it may actually even benefit lowering of this cash business that happens in real estate. Because if the slab rate is lower, if the term is 10 is 12 months, people may just not want to get into the hassle of a cash dealing, and that may spur a very different kind of a wave of clean money coming into real estate. So that, I think, can be one good reason for bringing down the rates for long term in real estate and to bring down the tenure of the long term holding. Other concessions that are getting proposed or which are getting rumored are 50% hike in exemption limit for sale of ancestral property. So currently, I think the exemption limit is at 10 crores, because a lot of times, uh, you know, people are sitting with ancestral or generational properties. For instance, in NCR, if somebody had bought something on central Delhi, some large plots of land and houses there which are 100-year-old, they will sell for 20, 30, 40, 50 crores. And to have that long-term capital gain exemption under Section 54 cut off at 10 crores is a bit, unfair to that extent. So there also some concessions could come through because of, if proceeds are used for critical illness or old age, etc. So, with all this chatter going along, we had, all the real estate stocks have a tick up today. So, Shobha was up 3.5%, Suntech, Prestige, Brigade, Godrej Properties, all of them were up a bit, although nowhere near the extent of a, full-blown kind of a rally. I mean, if this was confirmed, they would be up like 10% each. So property held for more than 12 months to be considered as long-term asset is the rumor to be brought in line with equities. Just to give you where real estate has been. So from, let's say, the last 15 years, real estate, especially the real estate index that we can see as the white line, has not gone anywhere. I mean, only very recently you see that, we have covered some ground versus 2007. So where we were in 2007, we are virtually there 15 years later. So that has been the hiatus or the, sort of long bear run in the real estate. And whenever real estate rallies start, they will not go and finish in a year or 2 or 3 years. They will go long, likely 6 years, 7 years, 8 years, 10 years kind of rallies can happen. And if I were to sort of see where the Nifty has gone in the same time period, of course not comparable, but just to give a comparison, Nifty has gone up 520% in the same time period where real estate has not gone up at all. So there is merit to the fact that real estate should be looked at favorably in terms of any tax benefits. But in the last, you can say, 1 year and 3 months, real estate has really come back. You can see real estate is CNX Reality Index is up 200%, 195% versus Nifty at 44%. So this gap is getting closed rapidly. Real estate stocks have done very, very well. And right now, there is no let up in any of these pockets that I see. So while prices have gone up quite crazily, but if you see the amount of, a full decade of nothingness before that, then the lack of inventory buildup also probably means that there's a lot more to come in real estate, and that may be really a sector to look out for in the next half a decade. So this is all I have for today. Thank you so much for watching. Please do comment on the content, share your views on real estate taxation. Do like and share this video, and of course, please do subscribe to it. Thank you. Bye.